distinguished guests, ladies and gentlemen, I'm delighted to be here with you today. And a warm welcome to all of our guests, both from GCEL as well as the Union of Arab Banks. I hope this event proves to be a catalyst for enhanced, obviously, global trade as well as job creation, because the world needs both. Following the global financial crisis, as you've seen, there's been a lot of damage, and that is most visible in the form of job destruction, but also in the form of protectionist tendencies. So I do hope that events like this, initiatives like this, will help serve and will help remind policymakers that there are actually alternative ways of enhancing both job prospects as well as trade. Trade is absolutely critical to global prosperity, to global peace, but also to job creation. And GCEL's Huma Wealth program is very ambitious. I'm sure other panelists will tell you all about the targets, but I just went through some of the leaflets that they had given to me about, was it a month ago or so, when they visited me in Ankara. It's actually quite impressive numbers, because it does suggest that if this program is fully implemented, that it could enhance or increase global trade volume by up to $1.2 trillion, as well as reduce the cost of trading by about $700 billion a year, which is quite ambitious and creates, obviously, up to 100 million jobs. So I think, even though it may sound ambitious, I think it's important that to look at this type of initiatives and see how they could actually enhance the trade, regardless of the impact. Because we have to be more innovative. Globally, we've tried lots of things. I mean, look at the past 4 years. Look at United States, look at Eurozone. They printed a lot of money. They did a lot of fiscal stimulus. And it still seems that we're nowhere near achieving a sustained recovery in the form of, obviously, jobs, as well as going back to pre-crisis, let's say, global trend growth. So I think it's very important that we focus on structural reforms, that we focus on more innovative ways of getting out of this crisis. Europe is currently not in such a good shape, to put it mildly. In fact, latest data suggests that Europe may be heading to a recession. Now, that's not a welcome prospect for both global economy as well as Turkish economy, because we are exposed to European Union. In particular, we are exposed to Eurozone. European Union accounts for almost half of our exports, almost 75–80% of FDI inflows, foreign direct investments, into Turkey, as well as nearly 60% of tourist arrivals. So we do hope that Europe will be able to finally sort of fix its its own house, restore confidence, and start growing. We just hope that they will be able to achieve that. I just came from, I was with Prime Minister at G20 summit, and that summit was probably one of the gloomiest one we have ever had. Even when it looked like sky was falling a few years ago at the peak of the crisis. So I think it's time that Europe shows some leadership, and it's time that we address issues in a more fundamental way because the health of European economy is absolutely critical to the world economy as well as Turkish economy, because Europe is still one of the main engine of the world economy, and it accounts for almost a third of global economy. So clearly what happens in Europe matters for us. But we have also been working hard to diversify away from Europe. Just as our Arab friends, Arab neighbors, are trying to diversify their economy away from hydrocarbons, from oil and gas, and try to provide, obviously, a better climate for SMEs, for job creation, for trade. We've actually, over the last 9-10 years, we've been focusing on how to enhance our trade relations with more dynamic and countries with younger population, countries that has strong prospects going forward, North Africa, Middle East, Asia. So there's been a lot of strong focus, and that focus has paid off, because at the peak, our European Union accounted for almost 57% of our total exports. Today, it accounts for about 46%. So there has been a lot of rebalancing there, partly because Europe is not doing that well, but also partly because there has been a very systematic effort to enhance our trade, investments, and cultural relations with, as I said, our immediate neighborhood, countries that we have very strong historic, cultural links. So it only made a lot of sense, and we've been actually quite successful. The share of Africa in our total trade has more than doubled. The share of Arab nations has more than doubled, while the share of more developed countries has actually declined. So we will continue. Obviously, Europe remains our core market, and we do believe that ultimately the current problems will be addressed. I think more structural reforms would certainly help. Fiscal adjustment is important, but cannot be sustained on its own. I think Turkey is a very good example of how to essentially move back, restore fiscal health, but also move back to a very healthy growth after being on the brink. Because if you go back to 2000, 2001, Turkey was on the brink. And Turkey experienced a severe financial crisis. But what has happened since then, a combination of fiscal adjustment and strong structural reforms, has delivered strong job creation, strong economic growth, and obviously higher prosperity. Look at the last 4 years. Since the end of 2007, Turkey has created more than 4 million jobs. In the same period, 27 members of EU have actually destroyed 1.6 million jobs, meaning they've lost 1.6 million jobs. This is not something that obviously can be sustained. I think today we have unemployment numbers out. Seasonally adjusted unemployment rate is 9.6%. This is welcome because we are way down, we are well below the pre-crisis level. Pre-crisis level, seasonally adjusted unemployment rate in this country was just north of 10%. Today, it's almost 9.6%, which is very encouraging. And we have a medium-term economic program that foresees further structural reforms to enhance employment prospects, to enhance growth prospects. Of course, we're not an island. I've always said this. We are part of global economy. We are integrated obviously with European Union, with global economy. So we will be affected by what's happening around us. But I think if you have good politics and good policies, and if you have strong fundamentals, then you can show a lot of resilience. You will reduce your vulnerabilities to external shocks. And I think that has been the case. I mean, 2008, 2009 global crisis, which was one of the worst since Second World War, or the worst one, it was a major stress test for Turkish economy. And we essentially overcome that quite successfully. In the past, we were not able to deal with our own crisis. Most past crises were a result of policy mistakes of Turkey. And most crises were internally driven. Even when global economy was in a sort of smooth sailing position, we had experienced major problems, major crises. But that has changed because over the past 8-9 years, under AK Party rule, there has been very strong focus on fiscal discipline, meaning fiscal consolidation, but also structural reforms. What sort of structural reforms? Exactly the type of structural reforms that GCEL program actually foresees, because we know that there is plenty of capital out there. All we have to do is to enhance investment climate, is to make it easier to do business in this country. And that requires a wholesale change at the micro level. And as much as macroeconomic reforms, you really need to also focus at micro level problems. You know, that's why we've been focused on how to eliminate barriers to competition, because without competition, you cannot be innovative. Without competition, you cannot be more productive. And that's been one of the key angles of our program. Secondly, we've also been working hard on how to enhance our infrastructure. And today we're talking about a digital infrastructure, but physical infrastructure still matters. And that's why we've spent a lot of resources and tried to make use of private sector dynamism to enhance the physical infrastructure of this country, like building roads, building rail links, ports, airports, and obviously telecommunication infrastructure. And I think Turkey has gone a long way in terms of narrowing the gap between us and relatively developed Western Europe. We've also been focused strongly on R&D, and I think that's very important as well. Even though the share of R&D spending as a percent of GDP may not be high in absolute terms, but considering where we've come from, I think it shows that there has been, again, very strong focus there. For example, Turkish GDP in US dollar terms has more than tripled over the last 9 years. It moved from about $235 billion to probably this year to over $750 billion very comfortably. Now, at the same time, R&D spending as a percent of GDP has almost doubled. And I think it's important to sustain this pace. Why? Because, again, if Turkey is to move up the value chain, if Turkey is to produce more knowledge-intensive, technology-intensive products and services, then we need to continue to focus on R&D. But innovation is also absolutely key. R&D on its own is not enough. And I think today's event, today's conference, is about one of these innovative ways of actually reducing the cost of doing trade with the rest of the world, connecting Turkish businesses to a global network of companies, that may be in need of Turkish products. And I think this is very important, and that's why I'm delighted to be part of this. I'm delighted to welcome this initiative. I think it's a very important one, because we need to continuously focus on how to do things better, with less resources, and that's really essentially innovation. And as I said, today's initiative is one of these. So I'd like to congratulate both GCEL and Union of Arab Banks for essentially bringing this to our attention. And I'd like to thank you all for participating, and I wish you a very productive event, very productive day. And thank you very much for being here, and I hope you enjoy Ankara.